Okay, good morning. Time now a few minutes after 8 o'clock in the morning in Tokyo, Tuesday, October 19th, 2021. Welcome to another edition of the World Bank Group morning seminar organized by the World Bank Tokyo office. My name is Koichi Omori. I am Senior External Affairs Officer of the World Bank based in Tokyo. We organize many interesting seminars We organize many interesting seminars introducing the latest report presented by the World Bank Group economists and specialists. Every spring and fall, six regional chief economist offices of the World Bank issue the half-yearly regional economic update. This is more or less like the semi-annual report of each of the six regions, typically consisting of the macroeconomic overview and deeper analysis of the key and strategic topics. As we have established a good tradition to introduce all of them at our morning seminar program. For the fall 2021, we have already featured the East Asia and the Pacific 2 weeks ago, and today we are going to feature the Africa. This is also part of online efforts to raise awareness and to deepen our understanding on Africa in line with the Tokyo International Conference on African Development, TICAD. Connecting from Washington, we have Cesar Calderon, the lead economist in the Office of the Chief Economist for Africa region. Cesar is, of course, a regular speaker to present the Africa Pulse report in the last several years. Cesar, good evening to you. How are you? Thanks for joining us.
How are you, Koichi? And thanks again for the invitation. It's always a pleasure to come to the Tokyo morning seminars.
Great. Thank you very much. We'll listen to Cesar presenting the main point of the report in the next 40 minutes. I'll read then your questions that we received from our viewers in advance. Thank you very much for sending those questions. If you do not have opportunity to send and submit your questions in advance, please send your question during the seminar using online form posted on the website of the announcement of this seminar, or you can simply post your questions on the chat section of the YouTube screen. And I would like to ask everyone to post or send your question rather earlier, so we do not miss we do not miss the opportunity to read your question in a timely manner, asking Cesar to respond during the seminar. So I would like to now ask Cesar to come in to start your presentation. Over to you.
Okay, thank you so much, Koichi. I'm going to try to share the content of the presentation. I hope it goes well. Let's see. I wonder if people can see the presentation.
No, we see your desktop screen right now.
Okay, 1 second. I think I can try to do. Oh, 1 second. My apologies for the problem. How about now?
No, it's not coming yet.
There should be now. I mean, I think I have it. How about now?
No, not yet.
Oh, shoot.
Have you started sharing, or if you
Yeah, I start sharing, and I went to the screen and I put the presenter. What was it? The presenter.
Yeah.
Okay, give me 1 second. I'm going to try to make this happen quickly. Okay, sorry about that. Okay.
And can you go to the presentation view? Slide
Yeah, presentation. Yep, presentation view. It's taking time. Okay. Now, are we okay?
No, there's no slide showing in. Ah, yes, now it's coming now.
Okay, sorry about that. I lost a couple of minutes, I think. Thank you. Thanks again. I hope nobody has an issue with the screen. We can start the presentation.
Data interruption. Can you go
yes.
to place setting?
And swap presenter view?
Yes, sure. Yeah, thank you.
Yeah, there you go. Now it's better, right? Okay. If there's no problem, we can start now. My apologies again for the.
Sorry, so I still see the presenter view. So can you go to the three ellipses icon under the slide?
Which one you said?
Three ellipses icon. So
Okay. Show taskbar. Is that the one?
no, so can you go to the, can you see six icon under the slide?
Okay.
And then the right one, so three ellipses icon.
Oh, I see. I see what you mean. Okay. I am
And
there.
to hide presenter views.
Okay.
Yes, that's one. Great.
Okay. So yeah,
And
I hit that.
thank you.
So we're fine now. Okay.
Thank you.
Thanks again. I'm gonna try to. I'm gonna try to go fast. Well, I would like to thank again the Tokyo office for the invitation to present the latest version of the Africa's Pulse. This is the 24th volume of the Africa's Pulse, and it focuses on not only on the recent developments in the African region, but also the importance of seizing the opportunity of climate change in sub-Saharan Africa. Just in case I cannot finish my presentation, I'm going to try to summarize this report in four main messages. The first message, a very important message, is that Africa has exited the recession in 2020. However, the economic rebound and economic recovery that the region is currently experiencing is still fragile. The rebound in economic activity in the region, I'm not going to go through the numbers here because we're going to go through them in the presentation, is still weak. It's weaker than growth in advanced economies and growth in emerging markets. And the fragility stands by the fact that the region, sub-Saharan Africa, lacks both advanced economies and other emerging markets in terms of the deployment of vaccines, and also in terms of the size of the fiscal support to economic activity. No? The second message that we want to highlight in the report is that African countries have not been able to inject the level of resources that is needed in order to deploy a strong policy response to COVID-19. Why is that? I mean, one of the explanations is the fact that the countries in the region already had a limited fiscal space prior to COVID-19, with widened deficits, with higher debt vulnerabilities, and at the same time, some countries, due to debt issues weighing on their fiscal accounts, were required to consolidate fiscally. Examples of that are Angola and Zambia in the region. So if we look at 2020 and 2021, countries in the region have been relatively disciplined in terms of monetary and fiscal policy, and we're going to go through that. We're going to go through that argument, so you're going to see what I'm telling you right now. And a number of countries in the region have also embarked in hard to do and hard to sell structural reforms. You have the case of, for instance, Ethiopia with the telecommunications reform. You have the case of Nigeria on the fuel subsidy reform, and also in the case of Sudan, you have the exchange rate unification policy. The third message that we are highlighting in this report would be the fact that Africa bears with the brunt of climate change, but contributes little to it. And if you think about it, it's not the development of Africa affecting climate as much as other regions, but climate affecting the development of Africa. No? The region only produces 2 to 3% of the global carbon dioxide emissions from industry and energy sources. 2 to 3% is nothing compared to other countries. But at the same time, the cost of climate change is big. Recent estimates show that monthly economic activity in Africa can drop by 1% when the temperature is 0.5 degrees Celsius higher with respect to historical patterns. At the same time, the impact of natural hazards, whether it's a drought or a flood or a storm in the region, is much higher than in other developing countries outside. Part of the reason why the impact is so high is the fact that these are shocks that are affecting disproportionately the poor in Africa. It's also exacerbated by the fact that African countries rely heavily on climate-intensive activities, and again, the case of poor countries that lack the coping mechanisms to mitigate these shocks. The fourth message, and it's kind of like a hopeful message, is that Africa can seize the opportunity of climate change to transform the economy and to create jobs. And there are several areas of opportunity that we have identified in the report, and then we're going to present them one by one. But just to provide some highlights, is the transition to a low carbon economy can be an opportunity to Africa in terms of reaching, for instance, the goal of the SDG of universal access to energy by adopting renewable energy technologies, investment in climate infrastructure that can deliver jobs, as well as other benefits to cities, and manufacturing. Decarbonization can help develop manufacturing in certain countries in the region. And we're going to talk a little bit about that later. But I would like to start with these four salient messages that can be extracted from the report. Our first slide have to do a little bit with what's going on in global growth. If you look at, especially at the second graph, we have that global growth appeared to have peaked in 2021, and it's expecting to slow down steadily in 2022. In 2021, global growth was around 5.6%, with a big contribution from advanced economies that are basically driving this global growth, and basically this increase in the growth rate in 2021 is to some extent explained by a recovery in global trade. But 2021 is an interesting year because it's a year of two halves. The first half, a quick rebound, not only based on trade, but also commodity prices, relaxation of COVID-related stringent measures. But in the second half, there has been a slowdown. It's like growth has lost momentum. Still, the recovery is large for some countries. But in this slowdown in economic activity that is going to be a little bit more salient in 2022 can be attributed to, for instance, the spread of the coronavirus or variants of the coronavirus, can be also attributed to for instance, the eventual withdrawing of fiscal stimulus, especially and monetary stimulus. Already some central banks in advanced economies are like the Fed, more explicitly the Fed is thinking about starting their tapering program. Supply bottlenecks, we know the supply issues have been, supply chain issues have been really hurting manufacturing, especially in the second half of this year, and lingering inflationary pressures that might lead in the future to increase in policy rates. Okay, now one of the things that we want to highlight also in the evolution of the global growth is the fact that global growth is now showing a dual track record. And the dual track recovery basically tells you that the world is growing at two different speeds. with advanced economies growing at a faster speed than emerging markets. And part of the reason why this is happening is because of the differences in the speed of the vaccine rollout. We'll go to the next slide. Commodity prices. Commodity prices, as you can see in this graph, they have elevated from the troughs that they had in May 2020. They have been protractedly increasing, to the extent that some commodities not only have reached all-time highs, but most of them have reached levels that are above pre-pandemic levels. Of course, the cost of importing has increased due to increase in shipping costs, as you can see in the graph that is next to the aggregate commodity prices. But at the same time, also in the case of, for instance, metals and energy, the COVID-19 has introduced certain uncertainty in the demand for these commodities. All those forces have pressure towards an increase in commodity prices. In the case of Africa, if we talk a little bit about Africa before we talk about the economic situation, the economic outlook of the region, we wanted to present this graph that clearly shows the three waves of COVID-19 that has affected the region since the onset of the pandemic. As you can see, for instance, in the first graph, which shows the daily new cases, and you look at the peaks, each peak has been higher. If you think about the number of new daily cases, for instance, the peak number of new daily cases in the third wave that was pretty much driven by the Delta variant of the coronavirus that was first identified in India, we're talking about on average 30,000 new cases per day. Whereas if you look at the second wave, which was pretty much driven by the Beta variant, which was the Alpha and Beta that were identified both in Kent in the UK and South Africa, then the number of daily cases is around 26,000. So it's smaller than that. Of course, in the first wave, the original strain of the coronavirus, we have 15,000 people that are infected daily. Those are the peaks. And the same idea is when we look at deaths. The only difference is that in the case of death, the peak of deaths around 700 per day were pretty much similar during the second and third wave. Next, as we said before, the problem in Africa is low vaccination. If you can take a look at this graph, you'll see Africa is here at the same level of Vietnam. This information is up to September. We're talking about a region that has less than 5%, as of mid-October, we're talking about a region that has less than 5% of people that are fully vaccinated. Okay, and you see the levels in the big difference between vaccination in Africa and vaccination in advanced countries, whether they are in the UK or France or the US or large emerging market economies such as Brazil. The difference is big. And the problem of the low vaccination rates in sub-Saharan Africa is that they render the region vulnerable to the emergence of new variants that can derail vaccination programs, or that can reduce the effectiveness of the existing vaccines or of the cohort or the generation of vaccines that are being inoculated among people. Again, progress in vaccines remains slow. Of course, there are differences across countries. There are two countries in the region that have not even started a vaccine campaign. And there are two countries in the region where they have managed to vaccinate more than half of the population fully. And those countries are Mauritius and Seychelles. South Africa, which is the country with the highest rate of infections in the region, has been able to fully vaccinate 25% of the people, of their population as of last Monday. Now, what are the factors that can explain the low vaccination in the region? There are three factors. One is vaccine inequity, the fact that countries in the region have received a very low amount of vaccine compared to the population that they have. The population coverage is very small in some countries. In some countries, the population coverage is less than even 2 to 3%. And that's one factor. The second factor would be logistics, the capacity of countries to put the jabs that they receive into people's hands. And that we can see a big gap in some countries. You can see a big gap in terms of the vaccines supplied to the country and the vaccines administered to the country. We still see some problems in terms of logistics. And the third factor is hesitancy. The interesting thing about Africa is that hesitancy, the percentage of people that are not confident to try to take the vaccine are also people that don't trust the government to ensure the safety of vaccines. Of course, there's also problems of fake news and mistrust on the companies that verify or institutions that verify the vaccine, et cetera, et cetera. It has to do with trusting government. But again, hesitancy you can see in the graph here the orange bar basically gives you the percentage of people in the region that are likely to take the vaccine. And you see that percentage is high in the case of Mauritius and Zambia, where we're talking about more than 60% of the people willing to take the vaccine. Whereas in countries like the Gambia and Senegal, we're talking about less than 30%. So the amount of hesitancy can be big in some countries. In the case of Sub-Saharan Africa, in the case of South Africa, which is again the country with the highest rate of infections and deaths, you still have more than half the population that is hesitant to take the vaccine. We're going to go a little bit faster with the economic outlook of the region. As we said in the beginning, the region is set to emerge from a recession in 2020. The region basically, the economic activity in the region contracted by 2% in 2020, and it has increased to 3.3% in 2021. It is expected to grow more further in 2022 and 2023, but at rates that are below 4%. If we look carefully at the illustration, we see that the main contributors to growth are private consumption and gross fixed investment or investment. Problems of fiscal space basically have not enabled governments in the region to expand government consumption. In the case of on the production side, we see that the rebound in economic activity is most attributed to services and to a lesser extent to a second degree industry. Okay. So in the case of the large countries in the region, we have that Nigeria has no clear signs of a speedy recovery. What you see in this graph is that there is some recovery in the second quarter of 2021 in services, but there is a deceleration in agriculture and a contraction in manufacturing. Again, the economic activity in Nigeria is being really propelled by the non-oil sector. As you can see in the second graph, oil production is, in spite of the prices, oil production is failing to pick up. In this case, the COVID-19 has had a big impact in economic activity in Nigeria, especially in the oil sector. no? Because the COVID has led to long delays both in exploration of new firms and an investment in new projects or investment in maintenance. No? In the case of South Africa, well, we know that South Africa was hit hard by the third wave of the coronavirus, and it basically had a record of infections and deaths in the continent, no? and historical within the pandemic. The situation was dire, and officials decided basically to raise lockdown restrictions to level 4 in June of 2021. The problem is that, and the lockdown restrictions were for a month. This basically generates a lot of disruption in economic activity, and that unfortunately was followed by civil unrest due to the arrest of former President Zuma for alleged corruption. That shows in the decline that you observe in June and July in vehicles sold, in manufacturing production, and even in the purchasing manager index. There has been some rebound, but it's not clear whether that is going to be enough, because there's a series of structural problems, like, for instance, electricity shortfalls that may restrict or limit growth prospects in the country. Next, when we look at what the future is, for Africa in terms of growth, again, as we said before, growth in 2022 and 2023 is going to be higher, but unfortunately, it's going to be below 4%. No? It's still, if you think about the growth of the population in the region, which is about 2.7%, we're talking about growth rates that are barely below 1%, and that's not enough if you want to eradicate poverty. No? And again, as I said before, the drivers from the expenditure side are consumption, private consumption, and investment, and from the production side, even though it's broad-based because all the sectors are contributing, the biggest contribution comes from services. No? Okay. And the strength of the recovery, of course, will be different across subregions. No? In East and Southern Africa, which is the second graph, the region that was the hardest hit by the third wave of the coronavirus, there's going to be an economic rebound from a decline of 3% in 2020 to an increase in 3.3% in 2021 and 3.4% in 2022. And this is going to be driven by the rebound in South Africa, that went from minus 6.4% in 2020 to 4.6% in 2021, thanks to, again, in this case, as it is the case of the region, this is thanks to a favorable global environment, trade recovery, elevated commodity prices. Still, as we said before, South Africa faces a series of structural problems. South Africa has an unemployment rate of 34.4% for instance, in the second quarter of 2021. And again, it needs to address electricity problems, labor market reforms, and product market reforms in order to push potential. Angola, in the case of Angola, which is another of the big countries in that part of the region, there is some progress, but still small. So we're talking about an economy that is growing from minus 5.4% in 2020 to 0.4% in 2021. It's supposed to accelerate to 3% in the next years, thanks to higher oil prices. However, again, in the case of Angola, a country that depends heavily on oil revenues, there is a lag in terms of the investments in both exploration of new new areas and investment in new projects. No? That is also somehow restricting growth. Okay. In the Western Central, we find that this is the region that had the lowest contraction, but at the same time is the region that has the smallest recovery, we can say that. The economic activity contracted by 0.8% in 2020, and it's expected to increase at 3.2% in 2020. Again, developments in this part of the region are explained, attributed mostly to Nigeria, but there are some countries outside Nigeria in the Western Central Africa that are showing fast growth. And one example of that is, for instance, Cote d'Ivoire, where one would expect Cote d'Ivoire to grow at 6.2% in 2021 and 6.5% in 2022. Next. We also try to think a little bit about alternative growth scenarios. And in this context, we try to think about what would happen if the vaccine deployment is faster in the region. So we had the baseline scenario that basically tells us that the vaccine delivery and coverage would prompt a relaxation of COVID-19 restrictions by the start of the first quarter of 2023. That's the baseline scenario. And by the way, relaxing disruptions implies getting to a percentage of fully vaccinated people of 35%. Okay, the downside scenario delays the relaxation of these restrictions towards the third quarter of 2023, whereas the upside scenario anticipates that relaxation to the fourth quarter of 2020. And then what we have, and I'm going to try to go fast because I think I'm going to run out of time soon, is what we have is that in the downside scenario, we're going to see a possibly lower growth in 2023 due to the problems in the vaccine rollout. No? In the case of the Africa or the Sub-Saharan Africa region, what we'll have is that output in 2023 will be down by 1.4 percentage points relative to the baseline projection. The impact is going to be bigger in East and Southern Africa than it will be in Western Central. No? In the upside scenario, we have the possibility of higher growth both in 2022 and 2023. And if African countries were to accelerate vaccine deployment to the extent that we can have 35% of the population fully vaccinated by the last quarter of 2022, then we're talking about a growth rate that would be higher or would be greater by 1.6 percentage points in 2022 and 1.5 in 2023. This implies that if the vaccine deployment were faster, the region could accelerate to growth that exceeds 5% in 2022 and 2023. Okay. Sorry, Koichi, do you know how much time do I have?
You can go for probably another 15 minutes or so.
Okay, thank you so much. As we said before, the recovery of the region remains fragile. The region, as we said, have very limited fiscal space and will need more resources, more financing to vigorously support the economy and mitigate the effects of the COVID-19. In terms of the current account deficits, they're narrowing. They're narrowing particularly in resource-rich countries. And this has to do with better export outcomes, thanks to a recovery in global trade and thanks to higher commodity prices. We observe that if we look at the region as a whole, so are these orange bars, what we have is a slight deterioration in the current account deficit. However, the behavior is very different when we when we talk about resource-rich countries and non-resource-rich. In the case of non-resource-rich, which is the blue line, we observe that there is a deterioration from 20 to 21. But that's not the case of either oil exporting or mineral metal exporting, where there is a big adjustment in terms of current account. In the case of exchange rates, I mean, to some extent, there has been a depreciation in most of the exchange rates, I think, except the Zambia kwacha. But the Zambia kwacha, the appreciation of the Zambia kwacha has to do more with some progress made in the handling of their debt issues, because there was a program with the IMF that was approved. The regions regain access to markets in 2021. We observed that as of August in 2021, countries in the region were able to raise about $9 billion in Eurobonds, an amount that is obviously higher than those in 2019 and 2020. As of August 2019, the largest issuer was Ghana. Ghana issued $3 billion in Eurobonds, and it was the first country to issue a Eurobond in dollars since the onset of the pandemic. These $3 billion that were raised by the government were part of a $5 billion financing to support growth-oriented programs, and they are stipulated in the government budget for 2021. In September, there was a big capital raising by the Nigerians. The country raised about $4 billion in Eurobonds in a sale that attracted at least, that was clearly oversubscribed, more than 4 times the original amount that the government planned to raise. And they decided to do it in 3 tranches. A $1.25 billion tranche for 7 years, a 12-year bond, for an amount of, and also of an amount of 1.5 billion, and also a 30-year bond for 1.25 billion. And the interest rates that they received were very favorable. I mean, the pandemic, as we said, even though the countries in the region regain access to market, debt vulnerabilities increased. And the increase in these debt vulnerabilities are basically captured to some extent by a certain increase in sovereign spreads. If you look at this graph, you see that as the pandemic was raging all over the world and also in sub-Saharan Africa, but in July, there is some increasing trend in sovereign spreads. I think the only country that is the exception to the rule is Zambia. Yeah, Zambia. Exactly. Okay. Inflation. Inflation is we are all talking about inflation now, about lingering inflationary effects. We're talking about food inflation, energy inflation. We're talking about supply chain problems, etc., etc. In the region, if we look at the inflation for the region as a whole, it has accelerated, of course, from 3.5% in 2020 to 4.3% in 2021. And this increase is pretty much attributed to higher food and energy prices. Inflation is expected to increase to 4.5% in the years 2022 and 2023. Now, there are some differences across country groups in terms of inflationary rates. The countries that are exporters of minerals and metals have a higher inflation. I think it's even around 7.4% in 2021, but it's expected to drop to 4.8%. And also the case of non-resource-rich countries, where inflation is supposed to fluctuate from 2021 to 2023 around 4%. In the case of oil exporting countries, we observe that there has been like some sort of deceleration of inflation in 21, but it's going to be stable around between 3 and 4% in the years of 2022 and 2023. One thing that we would like to also point out here is that, of course, there's a lot of heterogeneity across countries when we look at inflation performance in the region. But, you know, if we look at our numbers and we look at the expected inflation for 2021, out of 47 countries with available information, 38 countries in the region are projected to register single-digit average inflation rates for 2021. And only 2 countries will post an average inflation rate that exceeds 50%. And those countries are Sudan and Zimbabwe. Okay. Next, the fiscal balance. I mean, the fiscal deficit is expected to remain invariant at 5.4% of GDP in 2021. But again, the dynamics are different whenever we talk about resource-rich countries and non-resource-rich countries. We see that in the case of resource-rich countries, there's a narrowing of the fiscal balance. And this will have to do with higher commodity-based revenues, thanks to the recovering global trade and commodity prices. Now, when we go beyond the year 2021 and we look at 2022 and 2023, the fiscal balance of non-resource-rich countries, although higher, is declining at a faster pace. Okay. Public debt, well, we know the situation on public debt. Public debt has been increasing in the region since 2013, so even prior to COVID-19, the average level of public debt to GDP in the region right now is 71%, which basically is an increase of 30 percentage points of GDP since 2013. So over the last 8 years, public debt in the region has increased by 30 percentage points of GDP. And it also, and the thing is, not only we have the problem of higher public debt, but also there is a different composition in that public debt. There has the landscape of creditors that we observe right now among creditors of African economies in the last 5 years is completely different from the landscape of creditors that during the HIPIC days or the medium debt relief initiative. So it's very different now. There's a lot of the share of commercial debt is bigger, which includes not only loans from commercial banks, but also Eurobonds and the loans from non-party club governments. And that translates into higher risks of rollover, interest rate, and currency risks for African countries. And unfortunately, the number of countries in debt distress in the region, which is the green section of the bar, if you look at the green section of the bar from 2013 to 2021, there has been a big increase. We're talking from 20% of countries in debt distress to more than 50%. Okay. Next. Again, as we said before, there has been the policy response of Sub-Saharan Africa has been insufficient to COVID-19. We argue that countries have been relatively disciplined. We mentioned that there were 38 countries with single-digit inflation rates in 2021. The expansion of fiscal deficit, well, this is also limited by the poor fiscal space, by the deteriorated fiscal space, was only 2.5 percentage points of GDP in 2020 for Sub-Saharan African countries on average. Whereas in the case of advanced economy, we're talking about an expansion of the fiscal deficit of more than 7 percentage points, which is a much difference. And also the amount of resources in terms of either expenditures or in terms of revenues foregone since the onset of the pandemic has been very different in the case of Africa vis-a-vis advanced economies. We're talking about the budget support for the pandemic in Africa, on average for the region as a whole, of 2.8% of GDP, or almost 3% of GDP. When in the case of advanced economies, we're talking about 17% of GDP. And at the same time, if we want to add insult to injury, some countries have been forced to, given the circumstances, they have implemented austerity measures. And sustainability problems. No? And we're talking about Angola and Zambia. More financing is needed. Yes, more financing is needed. There is a need to accelerate the recovery in the region, and putting a program to consolidate aggressively might be detrimental at this moment, might be detrimental for long-term growth. Meeting the development goals of the region will require help from the international community. The DSSI is about to expire, and my guess is that there's not going to be an extension, but at the same time, it has not contributed as much as people thought it was. There is a need to accelerate the process of countries seeking relief from the common framework. There has been some programs in Chad, in Ethiopia, and Zambia, but it needs to be faster, because the resolution in terms of debt restructuring for these three countries are going to be the benchmark for the restructuring of other countries, not necessarily low-income countries, but also middle-income countries. Okay, and finally, the allocation of SDRs in the region, which is a good shot in there, but not sufficient. The other options need to be explored, and no option should be out of the table in terms of help for African economies. Okay. And I'm going to try to finish in a minute, if possible, to talk a little bit about the special section of the report, which is about climate change. We know that if we look at the graph that is there in this slide, there is big anomalies in terms of temperature in sub-Saharan Africa. We're talking about for 2020, at 1.19 degrees Celsius annual average temperature above historical patterns, which is big. And there are going to be some areas in the region that is going to exceed 2 degrees Celsius warming by the last 2 decades of the century. Anomalies in temperatures and anomalies in precipitation, which is also something that the region is experiencing, are going to be accompanied, of course, by natural hazards. No? We're talking droughts, storms, and floods. And the frequency of natural hazards, as you can see in the graphs that are presented in that slide, have increased a lot. No? We're talking about droughts increasing over the last 40 years. They're triple the amount that it was 40 years ago. Storms more than quadruple, and floods are 10 times as high. At the same time, the incidence of natural resources in the region is higher than across the world, and you can see the world shares of these natural disasters, right? What are the opportunities that the region has? Oh, sorry. I'm going to try to wrap up with this. As we said before, energy access could be an opportunity where the adoption of renewable energy technologies, especially solar and wind, along with the expansion of the national grid, would make achieving the universal access to energy a more relatable goal. There are already firms in the continent that are providing training for jobs in solar energy, and that's not only in Africa, not only in South Africa, but also in countries like Togo. Improving governance in electricity is essential in order to enable and to foster the private sector participation, especially in renewables. Climate smart infrastructure would be a second area of opportunities, as we highlight in the report. Much of the infrastructure, cities, and transportation build systems in the region are yet to be built. So this is the opportunity to invest in climate smart infrastructure. There are recent studies like the one from the Coalition for Urban Transitions that show that the benefits these investments, not only in terms of money, but also in terms of jobs, are significant. No? Climate smart agriculture, we talk about technology, we talk about weather forecasts, social sensors, we're talking about a wide array of digital technologies to help farmers, high resolution aerial images, then modern practices, we're talking about new seed varieties, fertilizer, irrigation, machinery, and land policies as a lever to reduce greenhouse gas emissions. And finally, and this is where I'm going to end, decarbonization presents an opportunity to foster manufacturing activity in the region. There are three areas that can help, three specific areas that can help countries in the region boost manufacturing. One is the elaboration or the manufacturing of the components of the Internet of Things. The second thing is the value addition to minerals that will power the green economy. We're talking about coltan, we're talking about lithium, we're talking about copper, tin, magnesium, etc. And finally, the insertion into regional value chains. And then in this case, countries in the region can leverage from the Africa Continental Free Trade Agreement. Thank you so much.
Thank you very much. Thank you, Cesar, for your presentation. Thank you very much. Let me read the questions from the viewers, but let me start with this question related to the climate change point. Question is this one, question from Kodera-san. Thank you very much. Thank you for excellent presentation as always. On climate change, I support your view that adaptation rather than mitigation is more pressing issue for sub-Saharan Africa. My question is, how many countries have credible and realistic energy transition strategy to zero carbon economy? Here are global and regional numbers, but not many on individual countries' energy strategies. So this is the first question. And let me continue with another question related to climate change. So that will give you more opportunity to elaborate on the points that you may actually wanted to raise during the presentation. The presentation mentions 4 priority areas of opportunity: climate change, climate smart infrastructure, climate smart agriculture, and green manufacturing. The role of the private sector seems essential in each one of them. Especially technology seems to be important. Any observation in the report in this regard, particularly suggestion to the government for urgent action to enhance the collaboration with the private sector? This is a question from Kitamura-san. And then let me read one more question and ask you to respond comprehensively because of the interest of the time. Question from the anonymous participant. Since the stigmatization or social inclusion of the people who do not take vaccine should be avoided, what is the World Bank strategy for support such countries? I think you talked about the vaccine hesitancy and the trust of the people on the governments. If you have any comment and responses to those points.
Okay.
Greatly appreciate. Thank you.
No problem. Thank you, Koichi. Those 3 questions are very interesting questions. I'm going to start with, I guess, the one about vaccines, and I'm going to end with the climate change. In the case of vaccines, of course, I mean, I think the highlight in the bank is that they're working with partners to help developing countries finance the acquisition and distribution of COVID vaccines. The bank, so far as of the end of September, the World Bank has approved around 31 operations to support vaccine rollouts in 30 sub-Saharan African countries. So our first concern is, let's help these countries get the vaccine there. Our second concern, as I said before, is let's help these countries in the logistics necessary to try that the vaccine supply are administered. And the third one, the hesitancy, it's a very important issue. And again, if vaccination campaigns throughout the world have lessons, to reduce hesitancy, one is that you need to deploy mass communication, and you have to engage communities. That's critical to increase not only knowledge about the vaccines, but also awareness. a good communication campaign, a good engagement with the population from community leaders will help spread reliable information and can only create and reinforce confidence in the vaccine. There's a lot of what you call edutainment, which is entertainment education, and that is scalable and is cost effective. And the other one that is something that some advanced countries have done, but I don't know to what extent can be done in Africa, is lotteries. Some of these innovations have been tested already in previous vaccination campaigns. I mean, there's no reason why we cannot do this, replicate these tested innovations right now in order to reduce efficiency. The other one is that when a vaccine is authorized in the country, is not only authorized by a strict regulatory body, but also corroborated by organizations, global organizations, for instance, the World Health Organization. Okay. In the case of the climate change question, I mean, it's a very loaded question in the sense that there's a lot of things to say, but I'm going to try to be as comprehensive, but unfortunately, I'm not going to give a lot of detail. In the case of the collaboration with the private sector, collaboration with the private sector is key. It's key, not only in terms of investment that is needed from the private sector, but also policy efforts that need to develop the private sector in most of these countries. When we talk about access to energy, for instance, governments can foster these training programs for private sector individuals in solar technologies. There are countries that are already doing it. And these countries and that can generate jobs, because one of the things that Africa needs in order to develop and reduce poverty is they need to create jobs. Improving governance in electricity is important because it may enable private sector investment or partnership with the public sector in order to fund renewable energy programs. Climate smart agriculture, there is again from what can the government do to foster private sector participation? In this case, again, it has to do with regulation. What governments need to do, both in terms of analog and digital infrastructure, is try to implement regulations that will enable competition and innovation. Also, you need to have a regulatory framework that enables public-private partnerships and how they also assess properly the contingent liabilities that can arise from these partnerships. Climate smart agriculture, I think investment in digital has been helping not only on crop management, but also on identification of markets and identification of cheaper inputs. So investing in agriculture is changing to some extent the face of agriculture in some African countries. And in the case of green manufacturing, I think tax incentives is an important issue. One of the things that we were talking about in Africa is the need for, in order to mobilize resources domestically, we need to streamline tax incentives. In this context, what African governments can do is redesign their incentive programs, or their tax incentive programs or tax holidays for activities that will power the digital economy or that will power low carbon sectors. And in this context, environmental tax reforms can play a role. The first question was about the transition to energy, right? To be honest with you, we don't have numbers for countries. We know that off-grid production is increasing in certain countries in the region. But I think the biggest concern for us at the World Bank is that this energy transition can be inclusive, and that means affordable costs. No, I'll stop.
Okay, thank you very much, Cesar, for your presentation and responding to the questions from viewers. Once again, we had a pleasure of having Cesar Calderon, the lead economist of the Office of the Chief Economist for Africa region of the World Bank, presenting the latest edition of the Africa's Pulse. Thank you very much, Cesar, for being with us this morning. Thank you.
Thank you. Thanks again.
Great. We
And,
have
and
another.
to everybody else, good morning.
Thank you very much. Thank you. So we are going to have another round of the morning seminar this week. We will feature the latest edition of the Commodity Market Outlook, which will come out on October 21st in Washington time. This will start at 8 a.m. on Friday, October 22nd in Japan Standard Time. So the report is going to be presented to the stakeholders in Japan at our seminar in the evening of the day of the launch of the report in Washington time. So please check our website for the details of the upcoming online seminars. As I mentioned, we will feature the other regional economic updates, South Asia, Latin America, and Caribbean, Europe and Central Asia, and Middle East and North Africa in the next 3 weeks. So with that, I'd like to say once again, thank you very much. Stay safe, stay healthy. See you later this week. Thank you.